All right, everybody. I'm Stephen Cooley with Mortgage Advisors Tools. I'm here with Steve Polito from eqLend, right?
That's
That's
right.
right. How you doing, man?
I'm doing great. Thank you.
You live in one of my favorite cities.
Yeah, Philadelphia.
Yeah, that's very
Which
cool.
is not very many people call it a favorite city, so I'm excited that you said that.
Well, they don't know what they're missing.
I agree.
They haven't gone out to eat enough. They haven't, gotten around town enough. They just don't know.
That's right.
It's too bad. So no, very excited to chat with you. You guys have been a staple in the industry a long time, but for those that do not know, tell everyone what you guys do and how you are helping the mortgage industry.
So we've been in the mortgage industry writing mortgage software since 1996,
Mhm.
as a different name, Equinox Software.
Okay.
And our history really was in consulting for mortgage companies. And along the way, we wrote a loan origination system for a large Philly subprime, and a whole series of other things. But about 5 years ago, we really sort of changed our focus, so that rather than writing technology for mortgage companies, we've written our own series of products that we sell to mortgage companies. So it's a shift for us. So while eqLend is only 5 years old, our body of experience is 28 or so years old.
So
Um,
I would imagine in the 26 years you've seen quite a bit change. I mean, and you have a focus on underwriting. What's been some of the most significant shifts you've seen? Of course, some of these things have probably stayed the same, but what have you noticed, or what's
Huge.
grabbed your attention the most? Yeah, it's huge.
Huge
It's
shifts. Well, I
huge.
mean, we've been doing this, our experience with writing mortgage underwear software sort of predates the existence of DU.
Yeah, okay.
So, in 1999, we wrote an underwriting engine that was mated to a point of sale for eqLend Mortgage in 1999, where consumers went on the web, they typed in their app, we pulled a soft credit, the underwriting system that we worked on with another company, another partner lender, generated fully approved deals in 1999. So that was, the difference then was it was our own underwriting and our own pricing, and we weren't using a DU or Fannie
Right.
back then. And so, now it's very different. Now underwriting really is DU and LP focused. Um, but even though it's DU and LP focused, there's so much more to do, right? You have to
Right.
convert it to the way the lender looks at it, the lender's conditions. Usually you're looking at investor overlays. So it's interesting again.
Yeah, very cool. I mean, so I think also I mean, correct me if I'm wrong, but there's many more different departments within the mortgage industry, loan officers to processors to assistants to your secondary folks that are, I think maybe more aware of the process than ever before. I mean, how is that? How are you impacting, that new dynamic, I would say?
Well, you know that it's really insightful. So especially recently, um, what our product first eqLend is several products. We have a point of sale, we have a QA/QC system, we have many different sort of automations and data scrape. But our primary focus is an automated underwriting product that we have. And to your point, about all of these other people being involved, there's now a real understanding of the value of pushing automated underwriting to as far to the beginning of the process as
Yeah.
possible, because it affects the loan officers and the loan officer assistants. So what our product is embedded into Encompass, and it's created in such a way that um, you can use it entirely in Encompass without any interruption to the mortgage company's business process. You don't need to train anyone anything differently. Everything happens in Encompass. It looks exactly the same way it does now. It's produce the same conditions that the lender is already producing. We just produce them early in the process. Now, we have web portals and mobile apps and all sorts of cool stuff if you want to use those things. But the easiest way to adopt it is to make the process completely seamless
Absolutely.
in the LOS, exactly what they're doing now. So we find huge value, and we do this. It depends on the mortgage company, but mostly the way we do it is early. loan box, or they just got disclosures out. At either one of those times, we're pretty sure that the product is well formed. It's been priced. It's probably not going to change that much depending on that lender's personal business flow. And so we condition the loan then. We fill the e-folder with exactly the buckets that are needed. Everything's connected to conditions. We're producing borrowers' needs lists, and we're giving information to the folks so that the front end people can see what's needed, exactly what's needed. Now, I mean, every mortgage company has a great processor that knows that person they know what's needed on every file.
Right.
But that person's special. Most people don't know what's
Yeah.
needed on every
Right.
file. And so we start doing that. Now, everyone in the loan file can see exactly what's needed. And then what happens is the underwriters are getting way better submissions.
Yeah.
It's just organic. It happens organic.
I think that's the tagline for you is that, everybody's special. Right. I mean, that's just that simple. Yeah. No, I mean, well, with that being said, though, I mean, we talked a little bit beforehand. I mean, there are many solutions and different ways to skin this cat. And so what is your market differentiator or the features and functionalities that you are leaning into that are making you the obvious choice in the marketplace?
Well, that's a great question. I mean, there's great competition in the automated underwriting space. I mean, there are some big name marquee companies that people, they know a lot more about those companies than us, for example. But we do a couple of things that are very special and different. So most of those companies are only able to underwrite conventional loans and FHA loans. We do conventional, FHA, USDA, VA. We have about 28 bond programs. We can do 203K, home style. So we have a huge sort of breadth of products.
Okay.
So that that's our primary differentiator. I mean, there are some things that the other guys do better than us, but we think that what we do better by having such a huge product mix is that the sort of efficiencies that we bring and the value that we bring, you can get it on all of your loans, not just the average mortgage company does. They do some conventional loans and they do FHA, but they do a bunch of other stuff.
Yeah.
Right? So all their other loan products, they're not getting the ROI
Right.
from one of our competitors.
Yeah. No, I would say a consistent maybe criticism of the technology is that it makes the easiest product a little bit better, right? Like it's kind of the stall. It's like, well, I mean that's easy to do anyway. It's great. That used to take us 30 minutes. Now it takes us 15 or whatever that. So that's very cool.
I think our next differentiator is just the level of automation and how tightly we are plugged into the LOS, right? So you underwrite a loan that early in the process, things are going to change. The people are in there doing their job. So let's say the borrower needs to find a little extra cash to close, so they tell you about another bank account they have, so an asset gets added, or income changes, or you take away an income, whatever. Anything that happens in that loan, we're reevaluating it every time someone hits the save button in the LOS. So we didn't just underwrite it once in the beginning. We are underwriting it every time the save button's hit. So we're updating tasks to people. We're telling them what they need to get, or what maybe now you don't need to get because maybe an income was deleted or not needed. So we'll clear those tasks and get rid of them. So, the underwriting conditions are constantly up to date. So every time that salesperson or that LO assistant processor goes to the underwriting tab in the LOS to look at the conditions, it's up to date. It's perfect because we just keep updating it.
Excellent. Do you have anything, new features, products, anything that's new announcements here that are coming up?
Yeah, actually. So we don't do the data scrape ourselves. We've partnered with one of the sort of really big marquee names in data scraping mortgage documents. But what we do is we've got a really tight integration with them, and we leverage their data scrape. So we pull the borrower docs, for our lender clients, we can pull the borrower docs or docs out of the e-folder, and we data scrape them and we look for problems.
Okay.
We have business rules that try and find problems before they've really come to a head. So here's a great example. Homeowners insurance document comes in, the binder comes in. Depending on the mortgage company, maybe the processor is supposed to check it to see if the coverage amounts are good. Does it meet guidelines? Maybe the underwriter is supposed to do it. But in some cases, maybe someone forgets to do it. And then you could get to the closing and there's a closer who's about to do the docs and they've got on their checklist, check the insurance coverage amount, and they look at it and they say, it's not high enough. It's
Right.
50K too low.
Okay.
Right. So that's a train wreck.
Yeah.
So, what we do is as soon as that doc showed up in the e-folder, within seconds, we've pulled it out. We've got it over for data scrape. Data scrape comes back 10, 15 minutes. We run our business rules. We check the coverage amounts. Does everything line up? And if it does, great. We don't bother anyone. And if it doesn't, we make a task for whoever the person is in that company. Maybe it's the processor, maybe, whoever is supposed to fix that issue, we let them know. And that is huge, right? Because we're finding and stopping errors in the process before they become a train wreck.
Love that. Very cool. Well, man, I really appreciate your time today. And of course, you guys supporting Mortgage Advisor Tools. This has been very informative. And yeah, if you have not checked out eqLend, please, take some time, go over to Mortgage Advisor Tools, check it out. Steve, thank you so much for hanging out with me today.
Thank you, Stephen. Appreciate it. Thank you.
No problem.